Obviously, this is incredibly good for very undervalued Chinese equities, okay?
Hi stock investors, JJ here, welcome back. Well, this man on screen here, super investor David Tepper, has been pounding the table on Chinese stocks just in finance media today. So I'm going to react to what he said about Chinese stocks, about the Chinese economy, why he's so bullish, and we'll look at what stocks he actually owns in his fund that he obviously thinks are going to do well. First, we're going to have a look at Alibaba, the stock of the day here. Year to date, it's now up 40%. Now, if you've been watching Alibaba or haven't been watching it, you might be surprised by that. Just in the past month, it's up 28.51. And if we go back 5 years, of course, it's done pretty badly. But there are reasons that this stock has gone up, and we can look at other stocks as well. I saw this meme today. Michael Burry, who did well in The Big Short, he is big on Alibaba. It was on Reddit. Burry looking at his Baba and JD positions right now, so he's obviously happy with that. This headline, China stocks jump as political leaders pledge to shore up economy. So that's what's going on. Part of the reason for the jump, and we'll see what David Tepper has to say about that. China unleashes stimulus blitz and push to hit annual growth goal. And we have Alibaba Group Holding Limited, a good undervalued blue chip stock to buy according to analysts. So there's starting to be these headlines, analysts who have not been bullish suddenly turning bullish. David Tepper and Michael Burry and others have been bullish for a while, and it looks like the bottom has been found, and with stimulus coming from the Chinese government, Alibaba, JD.com and Baidu stocks surge. Stimulus sets China up for best week in a decade. That week is nearly over, so it's been a good run. Okay, let's go straight now to David Tepper.
You immediately thought China and currency differences around the world. So that was more important to you.
Because the undervaluation is, you know, listen, you can look at your chart and look at a chart of Bob on your screen right there, whatever stock you like. In China, they are, even with the recent moves, they're like on a flat line low compared to where they have been in the past. And
so did you catch that? He said even with the recent moves, and we saw how big those have been, like 10% a day just after the stimulus, but he still thinks they're cheap on valuation basis.
Sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here. That's kind of versus what, you're 20 plus on the S&P.
Right. He's saying the ones that trade over there, the ADRs trading in the US market, these big tech stocks like Alibaba, of course, JD, PDD, and others.
Okay, and then you have, so the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, and I apologize because I can't even speak English well. He came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said, we'll do more and more if needed. Now, the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot. They exceeded expectations, and he promised to do more and more and more. Okay? And that's very strange language, especially for any central banker, but especially over there. So
yeah, big change in policy from Chinese government. The policy there, obviously they want to stimulate. It does remind me of what happened in the US after COVID, the massive stimulus that came in. It does seem like that. They've changed their mind suddenly, although a lot of people have been waiting for this, and it seems to be happening.
So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus, that they were going to do. Now, physical stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast, what can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do right now, but it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates, and now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it, and they're also, believe this or not, swap facilities to buy stocks, encouraging buyback of stocks, encouraging buybacks of stocks.
You get the feeling over the past few years they really didn't like companies buying back. That was more about the wealth being distributed, so enriching shareholders by buying back wasn't seen as a good thing. But now, as he's saying, he's pointing out the policies changed. It's like they want them to do it.
Okay, this is China, all right? This is stock buybacks, not only encouraging it, lending you money to do it.
Wow.
And they're giving money like TELF money where you can put money out and you have no losses if you want to do it. You know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff. So,
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors?
It's a good question. It's what a lot of people, investors in their minds, that's why they're not investing in China.
Investing in China, too. What's the risk? How do you,
I mean, that
hedge that
would
risk?
be a risk, and that's why you have limits on how much you would invest.
So basically said asset allocation, their portfolio, not overweighting it too much in case the worst happens. That's just about risk, he's saying, but it doesn't sound too worried about that. But it's definitely one of the risks. He did say that.
However,
you just said you don't have those
the other
limits.
thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Or Europe or Japan.
Oh, Europe or Japan.
You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the buybacks.
Buybacks, and for you to take risk to buy stock. Right. Take a loan out, buy stock, you can't lose money on your loan.
Very good for undervalued Chinese equities, Chinese stocks, is what he's saying. That's his opinion. He's one of the best investors in the world. On his record, going back for quite a long time now, he's been doing well. He's performed very well in this fund. That's why people listen to him, and that's why this could have quite an influence on Wall Street.
So you have, so United States, so you have this world, and so I'm trying to figure the United States. So it's not really your first plot to go to invest right now, because you would say China first, Asia second, right? Asia at large second.
Okay.
Japan, then Japan, Korea, those markets. Also, actually, Asia and Europe before Japan. And I'll tell you.
So he's pretty keen on a lot of markets. He's keen on Asia, not just China. He's talking about Asia and in Europe too. So US kind of last. Maybe that's because valuations have gone up. Let's see what he has to say about that.
And I would tell you why. The problem with, you have to be careful a little bit about Japan, although I think it's still you want to be in the equity markets. If you look what happens, if China runs and they get the economy going and you get the animal spirits going, what happens? Chinese throw a lot of money in their economy. Who's one of the biggest beneficiaries in their own economy? Is Japan. And Japan, if they start running faster, I don't care what this election is, and they're worried about this candidate and that candidate. Some candidates might want to go to Abenomics, and I don't care. They don't even understand it yet. This just happened last night.
Warren Buffett is a big investor in Japan, or has become that over the past few years. He's been buying some in the US, but selling Apple, selling Bank of America, selling down those, not completely, just trimming way back though. But he has been buying the five, what's known as the trading houses in Japan, at low valuations over recent years. It's built up to be quite a big investment for Berkshire.
The market doesn't understand it yet. What's going to happen? Japan's going to run too fast if they really stimulate there. And when Japan runs too fast, they're going to have to raise rates. And when they raise rates, the yen's going to appreciate. And if the yen appreciates, then you have to be careful about the stock market, not the stock, depending how it goes. Now, the stock market in yen terms, you should still make money, but how much does it move or not because of how it historically does, right? So you go around the world. The U.S., listen, the problem with the U.S.,
it doesn't sound too keen. We're going to look at David Tepper's portfolio in a second to see what he actually owns and what he's been buying lately.
And then I could go European. The European index at 14 times multiple versus a 22. Historically, incredibly wide.
22 here.
21, 22, whatever you want to say
So
for
14,
next year.
So Europe looks good.
Yeah, it looks interesting.
We're like last. in your...
Well, Japan has the same sort of multiple right now, and you can
Okay.
say we have much better stocks and much bigger tech stocks and that. So the question here, where you don't have necessarily a cheap market, right? It's not a cheap market. It probably is, you know, and I didn't listen to him. I listened a little bit, but what Cooperman said yesterday. But if you looked at it historically, it's a little, you know, a little overvalued. Okay, I would say that. However, I get concerned about one thing because you know, fortunately or unfortunately, I was around in the 90s. I was around in the 80s too, but I was around in the 90s. Mm-hmm. And you know, in that market where the Fed, you know, cut rates into Y2K, you know, in a good economy, right. A relatively not a bad economy, but a relatively okay economy. You had those you know, rich in before long-term credit, rich in 97, relatively rich, richer after long-term credit, and you know, bubble mania in 99, early 2000. Mm-hmm. So I don't love. I'm a value guy. I don't love the U.S. markets on a value standpoint, but I sure as heck won't be short.
Wow. He's saying he's a value guy. Did you catch that? He is a value investor, but he wouldn't be short the US because he thinks it could go into a dot-com bubble type of situation, talking about being in the late 90s there, which went into bubble, and he experienced that. So even though his value is sticking there because he thinks it could go there, and he's talking about AI, of course, this time around.
Well,
because I would be nervous as heck about the setup. Right. With easy money everywhere, a relatively good economy, you know, and China just massive stimulus coming in. So it would make me nervous not to be somewhat long the U.S. Now, you know, so that's how the setup is, you know. So you can't be short the U.S. Right. You can't be short anything in Asia. Right. Anything in Asia. Nothing.
Okay. That's a big call. Okay, we're going to have a look at his portfolio now. If you're getting value out of this video so far, this episode, please remember to smash that like button to help the algorithm to spread it to more people. I really appreciate that. Thanks. Okay, let's have a look at David Tepper's portfolio, what he actually owns. We're going to specifically look at China, of course, and Alibaba is number one, 12.3%. Not surprising for what he's saying, the table pounding that he was doing there. And just in this last quarter, in one recent events, it would not surprise me if he increases allocation there, or he has done already. And if we go down the list here, let's look for the next Chinese stock. So PDD is 4.2%. We'll look at the graphs on these stocks in a minute to see what they've done, see how he's been doing so far. iShares China Large Cap ETF FXI. We'll have a look at the holdings in that in a second if you're not sure what that is. 2.93, so that's quite a big holding too. And next one's Baidu, which is 2.34. So these seem like smaller allocations compared to Alibaba, 12%, but still a lot of money. It's a big fund. This is a massive fund that he has, having done so well over the past. There's another one, Crane Shares CSI China Internet. It's K-Web, known as that. We'll have a look at the holdings in that too. So JD.com 0.18. He's got a lot of Chinese stocks here. Is seeing better value there. People have been skeptical, but now it's turning around. So he's caught that upswing for sure. KE Holdings is also another Chinese stock to do with real estate. We'll have a quick look at that. It's only 0.48, but I think that's probably been doing well since the uptick as well. So let's have a look at some of these in individual. Year to date now, Alibaba's up 40.54%. So that's had a big run up. I'm going to have a look at a month and a year to date. So 28%, that is beating the S&P 500 now. So suddenly these Chinese stocks have turned around. They're beating the S&P 500, beating the market benchmark that these fund managers and pretty much all investors look to beat the market. Otherwise, there's no point in picking stocks, is there really? PDD, 29% just in the past month. That's not year to date, that's past month. And it's still down year to date. It had a big run up and a run down. It's interesting to see the chart. Look at that. Back in 2021, along with the US emerging tech stocks, had a big crash from there, and it's been going up. The iShares China Large Cap, this is FXI ticker. It's up 21% in the past month and now 37% in year to date. So look at these big spikes lately since that stimulus was announced. So this is the holdings in that ETF. You got all the big ones there: Alibaba, Meituan, Tencent, China Construction Bank. Interesting, a bank, JD.com. BYD is in there as well, EV maker. that Buffett, Berkshire was involved in, was invested in. NetEase, Trip.com, Travel, Baidu, PetroChina, the weighting, so 8.95% is the top, and it drops down fairly quickly. Let's move on to Baidu is the next one. These are in order that he has in his portfolio, by the way. These are not random. 18.95% for Baidu in the past month, and year to date, it's down 11%. That's interesting, but look at that spike up again. 26.6%. Seems like the Chinese government's been sick of the stock market not doing well and has changed its tune there. Crane shares, CSI ETF, which is KWeb. Look at that spike up there, 32%. So year to date, it's now 25%. And if we go to the past month, 27.79%. So incredible. And these are the holdings here just quickly. So 11% Alibaba at the top, Tencent next, and Meituan, JD, the usual suspects there with these big tech stocks. PDD, there's KE Holdings, the real estate related company. Interesting to see that. I haven't looked at that. I guess these investors and fund managers have picked that out as one of the better real estate ones. Real estate's been devastated in China. So interesting to see that there. Baidu, NetEase, again, so interesting ETFs there, I must say. So JD.com, further down his list there. Year to date, it's up 39%, and the past month, it's up 47%. He's had a good run. He must be pretty happy with what's going on with these multiple stocks that he owns. And there's KE Holdings, is a publicly listed Chinese real estate holding company. 32.59% just in the past month. Year to date, 25%. Look at that spike up. Look at that spike up. It's unusual to see this. 47% just since September 16th, that's gone up. So the stimulus is really helping here. So that's a run through of what David Tepper owns in his portfolio. What do you think of that? Let me know in the comments. What do you think of those holdings or what's happening in China? Do you agree with David Tepper? What's going to be happening in China? Do you think that this is going to continue? The stimulus is going to continue? He was really table pounding there. What do you think? And do you have any of these stocks in your portfolio? Do you have any Chinese stocks in your portfolio? And speaking of portfolios, I do have an offer for my viewers here through the Art of Value. I'll put a link to this landing page in the description. ShareSite is a portfolio tracking and reporting tool. I use it myself. I wouldn't recommend anything that I don't use myself. It's a great way to keep track of your portfolio, to know the true performance of your portfolio, including dividends. You can bring historical trades in and new trades, automatically bring new trades in. There's a video here on this landing page. Check that out to see what it's all about, ShareSite. And you can sign up for free too. And it's got some really good features there for free, but the offer is for the premium plan. Thanks for watching. I'm going to put a link on screen to what YouTube thinks that you should watch next. Thanks for watching this one. Hope you got value out of that. Subscribe if you did and like, and I will see you in the next one.